Hello guys, today let's talk about Huijie Group, ticker symbol 002763. Huijie Group was founded in 1996. It went public on the Shenzhen Stock Exchange in 2015. This is a company specializing in women's underwear. Some of its well-known Chinese underwear brands are Maniform, Invis, and Lingerie. This company has a market cap of 2.7 billion Chinese yuan with annual revenue of 2.5 to 3 billion Chinese yuan. The Maniform brand contributes the majority of revenue, about 70%. Invis accounts for 19% and the Lingerie makes up roughly 7%. These three brands alone account for 96% of total revenue, showing that Huijie's core business is highly focused. Huijie's price-to-book ratio is 1.42, and its average price-to-earnings ratio over the past 3 years is 14.2, both at moderate levels. Its current assets are 3.8 times its current liabilities, and the net working capital is 15 times its long-term debt. The financials are pretty solid, with strong ability to pay its debt. Huijie has remained profitable every year for 14 consecutive years. Over the past decade, it has also achieved around 23% profit growth. Since its IPO in 2015, Huijie has paid dividends almost every year, only skipping 2022. However, it's worth noting that its dividend payout ratio has been unusually high in recent years, often approaching or even exceeding its profits. In 2020, the dividend payout even reached twice the net profit. I'm unable to understand such generosity. It definitely raises doubts about whether the company lacks growth momentum, choosing not to retain earnings for research and development or business expansion. Now let's look at intrinsic value. Assuming 5% annual growth, Huijie's intrinsic value is at 9.4 Chinese yuan per share. Assuming no growth, intrinsic value is 6.8. And assuming negative growth, intrinsic value is 3.5. Huijie's strengths include a focused core business, robust financials, fairly good profits and a dividends track record, as well as the fact that women's underwear has robust demand and a relatively high purchase frequency. One concern is its unusually high dividends, often nearing or surpassing net profits. This seems unsustainable and may reflect a lack of growth opportunities. Given these factors, I believe we should value Huijie's stock more conservatively. Assume it's somewhere between no growth and a negative growth. Buying below 6 Chinese yuan per share would be a safer option. What do you think about Huijie's stock? Let's discuss in the comments. Stay tuned.